Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is NFP Live. Today, we're going to take a look at the latest NFP numbers out of the United States of America. The labor market has been a subject of voracious debate over about the past, 6, 7 months. We've seen rising unemployment. We need to see that job growth, that job creation that a lot of us expected about a year into the Trump administration. Everything's been designed economically to drive job growth and see exactly if we could get some positive GDP growth. I mean, that's what it's all about. If you're not growing, you're dying, and that's the basic idea here in the United States. So I want to welcome everybody back to the room. Good to see everybody back in our How to Trade community. Always a pleasure to see everybody out in YouTube land. Good to see you, Ken, Steven, always best trading channel on YouTube. Well, thanks, Steven. I appreciate that. It's very nice of you. Ice Hazy, just need to know which way gold, the US 30, the NASDAQ are going to go, and then we'll all walk away with big stacks of cash. Sudius, good to see you. Sudius, welcome. Amos, always a pleasure, guys. A lot of new names, a lot of new faces. Welcome. Now, it's NFP Live. Typically, I talk fast. I will try to slow it down. I know a lot of you speak English as maybe your fourth or fifth language. You're a lot smarter than me. I only speak one language, English, and I barely speak that. Sometimes I just chew it up and spit it out. So I'll do my best to be as clear as I can. What we're going to do today is we're going to look at a key level in U.S. oil. I'm going to give you a brief, quick and dirty breakdown on what exactly NFP is. And then we're also going to take a look at the employment situation numbers when they drop. I'm going to read you the actual release. We're going to talk about what it can mean, and then we're going to do a little high-impact scalping. We've got the 920 EMA loaded up and ready to go. Dollar yen had a great signal on that the other day. We're going to do a little bit of scalping with that, and then we're also going to be looking at Fibonacci numbers and potential range trades off of key levels, which is a concept I've got into key levels a lot, but I haven't talked about range with key very often. And there's a few that we can look at today. So it's good to see everybody. Tina, good to see you. Tina, welcome. Link, are we here? Feels good to be back. Absolutely. Absolutely. It's always great to be back. First NFP number of the new year. We're measuring December's jobs numbers. Should be interesting. Holiday season's always a big one here in the United States. We're curious to see exactly what happened last December. Let me see. Morning all from Tobermory, Canada. Well, right on, David. Good to see you. Welcome. Dillon, Montana here. So I'm about 300 miles south of the border, of the Canadian border. Tuku, good to see you, Tuku. Welcome over to How to Trade community. All right, everybody, let's go ahead and get started. Remember, if you want to trade any of these ideas or attack any of these markets that we're going to cover today, be sure to check out Switch. A lot of winter specials going on right now, credit bonuses, a lot of free tools. You know, the resources is something that we're really going to focus on for 2026, bringing as much value to the trader as possible, and that's going to range from everything from complimentary EAs to our suite of tools. A lot of tools videos are going to be hitting our YouTube channel, so be sure to check those out if you dare. All right, so the U.S. oil. This is going to be our latest trade idea. I put this one out yesterday. We're going to do sort of a summation. Maybe I'll do a little video. This week has been a banger week. Really a great week to get off and running. We had a fantastic trade in the Euro USD to start the year. We had a rough trade in the Australian dollar, Canadian dollar. Then we had a monster trade in gold, which sort of made it all right. Right now I'm watching the Dow very closely, 50,000 in the Dow. I'm also watching $60 in WTI crude oil. So we put a trade idea out yesterday. Those are out in our How to Trade trading room. Be sure to check that out. We also post them on our How to Trade on LinkedIn. If you're on LinkedIn, you can check those out there. And if you want to follow me directly and see exactly what I'm thinking throughout the trading day, ShaneV_trader on X. So here you go. Key level 60. I have a bearish bias towards WTI crude. We're in the heart of the North American winter, the Northern Hemisphere wintertime season. Typically, that means lagging demand for gasoline, diesel, things like that. Also, the Venezuela situation. Possibly Iran is going to fall. We're going to talk a lot about that. Keep your eyes open for maybe a news blitz if we do see breaking news out of Iran. That could potentially put a lot of new oil on the market. I'm bearish. I think if we get a chance to sell up around 60, that could be a very, very good trade for us. So I'm watching that one closely. Now, as far as the dollar index going into this NFP report in about 5 minutes, this is key. The dollar index is absolutely key. It's important that we understand we are in a steep downtrend with the U.S. dollar going back to the inauguration of Donald Trump last January. That's the bottom line. Now, since really the lows of June and a rebound of July, the dollar has traded sideways. I love this zone right up here. I've got a 13-month EMA at 100. We've also got a 38% retracement at 101.54. That's going to be sort of our kill zone for the dollar. I would be very, very, very surprised if we trade above 101.50. Probably, maybe this year. Now, I could be wrong. That's the beauty of being a trader. We don't have to be right. We just have to get in and out with precision. So good to see everybody back. Let's see a lot of folks showing up. Jeff, good to see you. Jeff, Daily Stock News. Good to see you, Daily. Shaquille, all right. How you doing? First time, welcome. Welcome to the room. I sure appreciate Steve Francis, Lita. A lot of familiar faces over in the How to Trade community. Okay, a quick and dirty look at what NFP is. We're going to go through this in 2 minutes, and then we're going to get back to the markets because we do need to be looking at price action right now. Remember, this is the first one of the year. What is NFP? It's just a measure of the jobs. That's it. Counts the number of workers in the United States. That's it. Don't make it any more complicated than it needs to be. How do we trade it? There was a question there. We trade it by judging the NFP number itself based on our projections and the previous release. So if it's higher than both, then we're probably thinking it's bullish. If it's lower than both, we're probably thinking it's bearish. If it's in the middle, I call it a sandwich number. We crumple it up, we throw it away. We come back next month looking for some decent inkling of what's happening in the jobs market. Now remember, big jobs number means what? Economic growth. Small jobs number means what? Economic contraction. In a growth cycle, typically you can see rising interest rates as the economy is healthy. In a contracting cycle, you're going to see lower interest rates because the economy is lagging or it's sick, and they're going to try to promote growth any way possible. Remember, central bankers do two things. They promote economic growth. They promote jobs growth, maximum employment, which essentially is economic growth. They promote maximum employment and pricing stability. That's it. We'll talk more about that. We're going to talk a lot about that rolling in to the first Fed meeting of the year. How does NFP impact the Forex? If it is above expectations, it's going to be bullish for the USD. All right, that essentially means that maybe rates are going to stay where they are or move higher. Below expectations, it's going to be bearish for the USD. Above expectations for equities and commodities is going to be bearish. Why? Stronger dollar means lower pricing for your equities and commodities markets. And if it's below expectations, that's going to be bullish for stocks and commodities. Guys, that's all there is to it. That's really all there is to it. Okay, let's get out and take a look at the gold market. I think that we've got some pretty good stuff going on in gold. We had really just a fantastic zone that we attacked earlier this week. Absolutely loved it. The 45 key level was gold. Gold in gold, believe it, no pun intended. Really a fantastic sell-off from that level, and one that I was very, very interested in going in, and very, very nice 800 pip trade. I loved it. Still smiling. But you can see we're getting that compression. So you remember the other day I sort of talked about the concept of a cup with handle in silver. You're having the same thing set up in gold. Now this one's not quite as good. I like the second side of that cup to be up here, up towards these all-time highs. But we just have to be brutally honest. I'm not a great artist, but this is the cup with the handle. There it is, and it's setting up on the daily. That's an extremely bullish indicator, no question about it. What you get with a cup with the handles, you get a top, a rebound, a test, compression, and then a break. So this is a very bullish, really a bullish signal here for gold. I'm watching that 45 level closely. It would not shock me if we revisit that on this number, realistically. Euro USD, interesting stuff on a 1 minute chart. I've got my Fibonacci retracements up there, or excuse me, I've got my Bollingers and my moving average up. And what we have is compression right now. That shouldn't surprise anybody. We're watching this closely for a breakout. I'm sort of leaning towards the bullish side of this pair, but right this second, we're in no man's land. So if you're in a position right now, best of luck to you. I mean, the market really is going to get shaken up here in about the next 60 seconds. I mean, here it comes. So we're watching this closely. This Euro USD, I'm going to be watching this for signs of a breakout. We're going to break one way or the other on the 1 minute. We're either going to break top side or downside. We're also going to be careful that we don't get caught in the chop. Dollar yen, great 4-hour chart. Great 4-hour chart. We had a buy signal back on the 7th of January. 920 EMA crossover. When the 9 crosses over the 20, a 4-hour Forex chart is really a brilliant time frame to be trading this type of strategy. Fantastic runner. Okay, I just hit you with a ton of information. Now it's time to sit back. We're going to watch this number drop. Believe me, we will slow everything way down. We'll evaluate what the number is, and then we're going to execute some trades in real time. So that's the idea. Japanese yen, we're going to keep this on the dollar yen. I'm going to dial this down to a 1 minute chart as well. Now, we'll talk about the trades as they set up, but first of all, we've got to see the number drop. Let me see. Universal, good to see you. Universal Aiden, should we long or short gold? Don't do anything right now. I can't tell you what to do. Don't do anything right now. Wait another few minutes, and then we'll start. Okay, there it is. Bang. Okay, so what happened? What's the number? There's your big volatility. There's your number drop, and there's your break. Dollar yen breaks to the top side, and now we're starting to have that buy signal set up on the 920. We are not going to take this one. We are not going, well, number one, it hasn't set up yet, but we're not going to take it. You can see the way that the coding works. We'll talk more about that in just a second. That's why that bar's lighting up gold, is because we have this coded to be sort of our indicator and our strategy. Very, very important that we understand a couple of things. This right here, we're getting into overbought territory. We're going to talk about that in a minute as well. What's the number? Does anybody have the number? What is the number? All right, I'm refreshing. I'm looking. January 9th, what's the top line number? Both total non-farm payrolls, employment, plus 50,000, and the unemployment rate at 4.4% changed little in December. 4.4% is big. That is down from 4.6%. That is absolutely huge. We'll talk about that in a second as well. Employment continued to trend up in food services and drinking places, so the bars are active. Well, it's football season. Everybody's at the bar, right? Healthcare and social assistance, retail trade lost jobs. Retail trade lost jobs. That's huge. Potential sign of economic contraction. Retail needs to be strong for you to grow, especially here in the United States. Downturn in retail jobs, not very good. 4.4% unemployment, Steve. Absolutely right. Fantastic. Crazy Turk, long or short gold. We'll look at it in just a second. We'll look at gold. This right here, this is it. This is what happens almost, it's not religiously, it's not every time, but this happens a lot. And you get the big chop, the big choppy action, and knocked out all the retail longs right there, and then the rebound. So everybody that went short down there is getting killed. That's why I really recommend giving these things, these markets, a couple of minutes to settle down. You don't want to get caught up in the mess. You really don't want to get caught up in the mess. All right, we have a lot of questions about gold. That Euro USD is going to take a while to develop any type of trading structure, in my view. Okay, here's gold. Now, this is a little bit easier for us. Let's go to our trading panel here. Pull up my paper trader. You need to ignore the leverage that I use. You need to use leverage that is sort of dialed in to your capital, not constraints, but your capital resources, 1% to 3% on any given trade. I was made aware the other day, some of you guys were following my trades along as we were doing our workshop the other day. You know, that's up to you. I'm not sitting here trading, telling you what to do. I'm just showing you how trades need to be executed in order to succeed in a market as dynamic as an NFP day. Number one thing we're seeing is huge volatility. No question about it. Gold trending higher. Right now I'm looking at 44.86. I'm thinking 45 in my head. I'm waiting for 45. I've got 45 on the brain. Do we go up and test it? I'm probably later today looking to short 45 again, just because we're so far off the pace. Okay, so right here, do we have an opportunity potentially to bid this market? Clearly bullish. All right, what does a strong number mean? Is it really strong? Not really that strong. We could definitely be playing right off this Fibonacci retracement, though, down there at 46. I would put it right in this zone right in here, 46.87, somewhere right in there. Not a bad place to be. We're going to go ahead, put it right there, and that's going to go ahead and be my entry. Now, remember, this is just a Fibonacci retracement sequence. This is how I approach the markets. It's not how really anybody else does it that I've seen, but this is how I've done it. I've done this for 15 years now. As far as following my trading, that is, you do that at your own risk. This is not financial advice. All I'm doing is showing you how you need to engage and think when you're faced with heavy volatility off of something like an NFP. That's all we're doing. We're making sure that we're dialed in, we're smart, and we understand what's going on. As soon as this action dies down a little bit, we're going to get into the numbers and what they mean, and then we're going to relate that. That unemployment rate's huge. 4.4% that is the headline number in my view. The non-farm payrolls number itself means absolutely nothing to me. 50,000 jobs. What's 50,000 jobs? They doctor these numbers all the time. The unemployment rate is absolutely huge. That's the big one. Okay, so going into this trade, what am I thinking about? It's a 1-minute trade. This is going to be a hot scalp. We're going to be in, we're going to be out. I'm not waiting around. I'm not sitting around taking a position today. I'm not betting gold's going to rally up to 4,500. What we're looking to do is we're looking to grab a couple of bucks on this trade. So if I was going to set a take profit for this, probably be somewhere right up in here. And once again, ignore my leverage. We're going to go right there at 70, let me see, 44, 76, 93, something like that. I'm only going to be looking to take a few bucks on this scalp. Now, we're going to have to reset our Fibonacci's right here because the market is moving higher, but that's the idea. That's the concept here when we dive into maybe a gold scalp, something like this. So let's go ahead and wipe that order off. Let's get rid of that. We're going to play for a little bit more money than that. Do something like that. Our pip value is going to be, what, Tick value is going to be $1 there. Yeah, that's fine. We'll do something like that. Okay, so we are driving higher, and all of a sudden our 45 level is coming into play, may come into play later today, no question about it. Right now we just move our Fibonacci's up. We've got a really strong range to work with here. You've got the bottom of your NFP 5 minutes ago. Now you've got sort of the market sort of topping out right around 44.88. This is going to set up for a really nice trade. It just depends on how high we're going to chase this thing. So something to think about there if you're interested in buying pullbacks and playing with pressure, basically using Fibonacci's. This right now is when I would love this trade. I've got a 13-period EMA right there. We're locked and loaded. I've got 38%. Where do I want to buy from? I want to buy from just above my 38% level, right in there. That would be exactly what we're looking to do. 44.77 is fantastic. I like that. My take profit, what are we going to look to do there? Probably put it right up in here somewhere. For 79, let's go for 80. Let's go for just maybe a full $3. Not a big move at all. Now my stop loss is going to be quick. We're not going to wait around. Bottom line is this. We're either going to get some heat, there's going to be bidders there, or they're not. And if they're not there, we got to bounce because we're not taking a big loss on that. For right this minute, I know in my head where I'm getting out at. I know my stop loss is going to be where? More than likely right beneath 75, somewhere right in this zone. Now, we're sort of set up at a 1-to-1 ratio there. I don't like setting my stop loss at a finite area right this minute. I don't like it because we're so volatile. We could easily go down and then bounce back up and get paid very, very fast. So typically, if I was executing this trade in the live market with real money, I wouldn't even have a stop loss down. I would be watching it like a hawk. I would have my profit target in the queue, and then bam, I would look to get out as soon as I got my money. If it went against me and really hiccuped at all, then I would just bounce. Those are advanced concepts. I don't expect anybody in here to really be able to manage trades on the fly until they've got a few years in this business. But you find out over time that you get tired of cutting off winning trades just because the initial price action within a few seconds goes against you, so you give these things a bit of time. But right there, it looks like we're going to miss our retracement, and this thing's going to go higher. This right here is really what we wanted to capitalize on. That's what we wanted right there. Our hammer did not quite get there. The low was 44.79. We were sitting down there at 77, but that price action right there is what we wanted. That's what we wanted. So did we miss out? It looks like we missed out, and we had a nice tight little $300 trade lined up and ready to roll there. It doesn't look like we're going to get it now. It's going to wash that top, and then we're going to have to adjust exactly how we're thinking. Trading can be a frustrating game. Don't let stuff like that get you down. Oh, I missed out. Don't worry. There's more. Don't worry. There's more. There's more trades than we can count. So right here, we would have a situation where your Fibonacci's are going to have to reset. I don't like the market structure at all right now. I would pull it. I would pull all of it. Maybe back off to a 5 minute and see what we're doing. See if I can get it. Okay, the 5 minute, pretty good stuff here. Wouldn't have any problem at all doing something like this, which essentially, there you go. And then right in there would be your level. Very similar to what we just did. It's just the 1 minute stuff sort of, we're going to wait a little while on that. We'll come back to that market and see what's happening. All right, U.S. dollar, Japanese yen, 1 minute chart, 920, EMA crossover. We had a big warning about taking that trade. You don't take that trade. That is a textbook 920 EMA crossover buy. Notice the gold bar. That's our coding coming in saying, okay, this is a bid signal. You don't want that trade. Shane, why don't I want that trade? Because that's what we call a news bar. The news dropped, voracious volatility, and then you get a signal after the news. You don't want that. You don't want that because it's not real. It's a ton of volatility coming into the market, ton of participation. It really skewed our technicals. And now we're in a situation where if we took that bid, you just got knocked out. So that's common sense right there. You got to say, okay, is this bar real? No, it's a news bar. Is this bar real? Pretty good, pretty good. So there's your sell theoretically, right? Your 1 minute sell. Could you take that trade? I wouldn't have. Why? Something called confirmation. Our RSI, Relative Strength Index, we use as confirmation. If I was looking to sell this, I would want to see at least a stop out point above that 70 level on the top end of the RSI. Price never got above 70. I'm not interested. Would I be looking to buy this right now? No. Why? did not go beneath our 30 on our RSI. Now, these are all concepts we cover in our live workshops. We've got a video out over at How to Trade on YouTube, 920 EMA crossover. I highly recommend it. We also put one out on the gold-silver ratio today, or actually that came out yesterday. Feel free to check that one out on Switch Markets. Good stuff here, though. I like the price action, but I'm not feeling it. Our RSI does not have us in overbought or oversold conditions. We have to wait. Let's take a look at gold. What's going on with gold on this 920 crossover? Okay, there it is. Absolutely nothing. There was your bid. That would have been a loser. I don't recommend taking those into a news release. You would have got stopped out before the big rally. Let's talk a minute about stop hunting. All right, realistically. Now, the whole world's not sitting here looking at a 920 chart on the 1 minute. They aren't. They're not going, okay, how are we going to screw all the traders that are trading this 920? No, they're not thinking that. But look what happened. If you were along right here, and I'm betting some folks were, clearly judging by the charts, where do you think the stop loss was? It was right there below market structure. No question about it. There was sort of a spike low back there, right in here. There was another, it's almost a double bottom on a 1 minute chart. Do you think that is an accident? I got the question yesterday. I said, Shane, I'm getting stopped out and the market's reversing in my favor religiously. It's happening all the time. And I said, okay. What do I do? And I said, well, if you're in trades like this, where you're taking bids here, you're taking bids here, and your stop loss is down here, and the market is doing something like this, where you're getting hit and then it's bouncing in your favor, the fix is easy. It really is easy. What is it? Instead of buying up here, buy where your stop loss location is. If that's happening all the time to you, it doesn't mean that you're wrong. It means you're onto something. Your stop loss locations are just better entries than your entries. There's no shame in that. And, of course, this is a news bar. All the volume comes into the market. They knock out all the retail longs before what? Before the market reverses and goes long. I've seen this more times than I can count. This is almost the rule of trading. Traders get eliminated before the getting gets good. It's the truth. I mean, it's like, think of trading like this. If any of you are familiar with poker, I'm not a poker player. I don't even particularly like the game at all, but it's very popular. A lot of times players that have really good cards get forced out of hands. Why? Because they raise the price too high. The pro players, they just keep raising the price and force you out, meaning you don't have enough money to see if your cards are actually going to win at the end. That's exactly what happened right here. I mean, you had a damn good hand. You had a very, very good hand, and you got forced out. The market came in and just banged you out, and there's no shame in that. A lot of folks are going to go home and they're going to kick the cat later. They're going to be mad, and they go, not only did I lose and I got my stop hit, but I also didn't get my trade. I didn't get my profit. And I go, yeah, welcome to trading. If you find something like this happening to you a lot, move your entries. Put your entry where your stop loss is. Why not? There's no rules in this game. Well, it's supposed to be my stop loss. Who cares? If it works better than your entry, take it. There's no rules. There really aren't. Any way you can make money, making money is the right answer, right? All right, so that's a good look at gold. Let's go ahead and take a look at a few of our indices here. I'll pull up my Fibonacci's here on the daily. I do want to take a look at the NASDAQ. We've got pretty good stuff coming our way on the NASDAQ. You can see we've got sort of a long-term ascending triangle. That's sort of our macro look. I believe it was a weekly chart we did that on, and it really shows you what's happening. Essentially, that's a monthly bullish pennant. Well, this is a good look on the weekly. It really is one of those things that we really expect a breakout, a bullish breakout. I believe it's coming. I don't think there's any question about it. You can see our key levels up there at 27.5, 26.255 is your all-time high. 25,000 is your key level. It's a monthly bullish pennant. We're looking at about 3-month compression. And when you get compressed markets for that long, it means that we're not just going a little bit high. We're going a lot high. So keep an eye on this NASDAQ. We'll take a look at the E-mini NASDAQ here in just a second, maybe do some scalping. I have a few questions, though, to answer, and then we're going to dive into potentially what this unemployment report means and how you can capitalize on it in the coming session, which starts in about 45 minutes in New York. Okay, a lot of questions here. Should we go long or short the gold? Neither. We missed our scalp. That scalp was going to be money in the bank. That's okay. Let me see. Kaya, do you think it's going to hit the all-time high? Absolutely, Kaya. Gold's more than likely going to break, in my view, it's going to break very high. It's going to break up over 45, and then once we get up over 45, then you'll run at that all-time high. No question. Well, we got a potential trade setting up right here in gold. All right, let's take a look. 5-minute chart. Interesting. We've had 15 minutes since the news dropped. Not as much volume in the market now. Things are calming down a bit. Let's go with an order. Let's go with a buy limit. Let's take our buy limit right down there to 38%. We're right there at 49. Let's just dial that in at about 80 and a quarter, somewhere in that zone. And I'm eyeballing this. We're not really too exact. Let's go ahead and see what happens here. My take profit on something like this, let's just go ahead and shoot for that $300. Nice little $3 move. I like that. And we're going to manage this on the fly. All right, we're going to manage this on the fly. We're not going to have a hard stop loss in. We're going to watch and we're going to execute. And that's if it comes our way. I'll keep an eye on that, and if it does come our way, I'll let you know. Okay, back to the questions. 4.4% unemployment is very, very good. Karma, good morning. How long does it take for NFP results to come out? It takes about a second. Once they drop them, they dropped it about 16 minutes ago now, and we'll cover the fundamentals here before we sign off because I do want to cover a few things here. Let me see. Hassis, a little bit stronger than a kiss at 45.20. Yeah, I think you're going to break above 45 big, but if you're looking to buy 45.20s, be sure there's some compression there first. You don't want to get chewed up with 45. There's going to be a lot of this right around 45. All right, let me see. Do you need RSI confirmation on the 920 if using the 4-hour chart? Stephen, good question. I don't. If I'm looking at, let me say, commodities, a 4-hour chart on the 920, the 4-hour chart is very good for commodities, gold, silver. You can apply it to crude oil too, but I never have done that, and I'm not interested. I got my own approach there. I'm not interested in a 4-hour chart on WTI. To me, crude oil is traded during the U.S. session. That's pretty much all I look at, aside from the daily ranges. As far as a 4-hour chart on Forex, absolutely. Forex is a true 24-hour market. The market is absolutely massive, and it's global. So when you're trading something like that, a 4-hour chart gives you a really great opportunity to trade something around the clock. So I don't need RSI confirmation on a 4-hour chart. I don't need it. I think the 4-hour and the moving averages with a 4-hour, our ranges are big enough to where we can attack those in isolation. But when we get down, this 5-minute chart, I'm not even, you can use it. I would say use it on a 5-minute on the 920, maybe a 30-minute, but I think 30 minutes and 4 hours, I would trade them as standalones. And if you're swing trading the 920 with a daily, that's pretty good stuff. You don't need confirmation there. 1 minute, though, yeah, you need help. Let me see. What can we expect from gold to go down or up? Yeah, Shaquille, I think we're going to go up. But right now we're pulling back a little bit. We're almost to our entry point on the 5-minute. We'll show that in a second. Let me see. Ali, what about Bitcoin? Absolutely good call, Ali. We're going to go ahead and look at Bitcoin here. In just a second, I'll give you my opinion on it. 90,000, big deal. It's a big deal. All right, we're coming our way on this entry. Let me see. Javon not kicking the cat. So, hey, some people are kicking the cat if they got stopped out on that gold trade on that 920. That was tough. Let me see. Poor kitty. Yeah. Don't abuse animals. That's not a good thing to do. It's not even funny, really, but it's an old saying. The guy's at home kicking the cat. Print zone. Let me see. Copper will fly or not? That's a great question. We do need to look at copper. Okay, here we go. We're going hunting here. Let's see. Buy limit orders somewhere right around 44.80, 50, somewhere in that zone, and we are right there. We are right there, 44.83. I would love to buy this dip. I would absolutely love to buy this dip. Let me see. Eli, Great Britain pound, Japanese yen is interesting again. We will take a look at that as well. So we'll go Bitcoin, copper, Great Britain pound, Japanese yen. If there's anything else you guys want to look at, feel free. I don't know if we're going to do any scalping on the not commodity futures, but equity futures today. Maybe if we have time. Man, we are just missing our dips. We're just missing our dips. We should have got that dip right there. Yeah, shoulda, woulda, coulda, right. We're still in the game. We'll see how it works. Let me see. Bobby Bob, hi Shane. It's a new year with no donation Friday. I hear you, Bobby. I was ready with my no donation stuff, and I said, well, it's NFP day, though. We got to trade NFP, don't we? We got to be aggressive on NFP day. So no donation Friday, definitely next week. But this has been, this week here, just with the trade ideas that we've put out in the room, Really a strong opening week to the year. Typically, we see slow, choppy action on the first week of the year, and we did not see that. Okay, here we go. We're almost in business. I'm going to give this another minute, and then we're going to go through Bitcoin and some of the other markets, and I'll monitor this out of one eye, and we'll run the analysis on the other eye. Okay, next 5-minute bar. I'm always thinking the next 5-minute bar, how's this one going to form? How's it going to form? What's it going to look like? Is it going to be a true breakout south? I don't think so. Maybe. We'll see. We're managing aggressively right now. Let's go to our trading dome, which doesn't really show us much because the spread's so big. Okay, right there. There's our trade. It's going against us a little bit. There's a little bit of an initial bounce. I feel decent about it right now. There's definitely bidders there. Okay, we're back to about break even. That spread in gold is tough right now. Looking at about 81 to 79 pips. That is a challenge to overcome, especially if you're scalping. But we've got a little bit of action here. So we just bought the market. We're going to look to sell the market up there right around 44.83. I'm watching closely. We want to get some heat. Okay, the pressure's on us now. Right now, we're starting to get a little bit concerned. We're going to wait. We're going to give this thing another minute. Let's go to a 1-minute chart and dial down our granularity and see exactly what's happening. Okay, now we're back to break even. No real reason to panic yet, but the pressure's not good. Okay, now we're going. Now we're going in our favor. Now we want to see that gap up. Give me that gap up to about 83.50, and then we got a real chance to win here. 83.50, print 83. Okay, right now 81's good. 81.50, give me 82.83. Give me 82.83. Right now, okay, a little bit of, there's sellers there. Okay, 82.50, fantastic. Now we've got a very good chance to win this thing. 82, okay, back to 82, 81.75, 81.57. A little bit of a pullback right there. Are we looking for more to the top side? That was tough. If we were going to win, we probably would have won right there. We're still in this trade. We're up about $100, $106, $96, $182. We're looking to really move up. Now, give me 53.50. Now, in this situation, a lot of traders will look to move their profit target up and get more because they believe a breakout's coming to the bull. To me, I'm very conservative with this stuff. 89, 89, 89, 89, 60, 63. I mean, it's just not, we should have got paid right there. Let's let this go for just another minute and see exactly what happens. But that right there, not a good sign. Okay, now the heat's on us, and we've got to really start to think about moving. We've got to think about moving. Let's give that line a chance to really work. We've given this thing a minute. We probably should have already been paid by now. We're not really in bad shape. The market's going up our way again. The question becomes, are we going to move towards our target, or are we going to take our line in the sand out? I'm losing confidence the longer we're in this. I'm losing confidence, but right now we've got a decent trade. We're up about $65, $60, $96. We just want to see that next bump. Where are the bidders at? We're going with the pressure. There's the bidders. Okay, let's see if we break to the top side here and get filled up. Are we going to get filled up? We're up about $150, $138, $171. Let's get up there to our 300. Let's hit our 300 target. Give this thing a shot. One more leg up and we've got it. 162, 167, 184, 179, 187, 295, 319. Give me 319 right here. Give me 319 right here. Bam. Okay. That was fast and furious, wasn't it? A couple of things to go over. Now we got to slow down. I know I'm going fast like an auctioneer, but that's trading. That's scalping. Beautiful trade. It was hard, though. Initially, I wanted that shot right there to bounce up and fill us up in that next minute. However, you remember me saying I'm losing confidence, and I was losing confidence. Look at the compression on that 1-minute chart. Now, it did break our way, but it could have broke the other way. We had a really good level to work with right around 80, 44.80. It turned out to be a successful trade. Now, what happens from here, I really don't know. But that's the scalping mindset. I get a lot of you talk to me every day about being a scalper and what it is to be a scalper and what you want to do in the markets. That's scalping. Your brain's going fast. Price is going fast. Everything is really fast. You can hit scalps like that with a very, very high degree of accuracy if you have the right approach. You really can. The problem with trading that tight is when it starts to get away from you. How fast can you get out of a bad trade? We were very close to pulling the plug on that thing. There wasn't really any reason to, but what we were going to do is we were going to move our stop loss up. So going into this trade, we were looking for 300, a payoff of about 300, which was right up around 80. No, what was it? 82? I don't even remember now. It was 82 or 83. That was going to be our target, right? So if I'm going to take that trade and I'm at 82, 83, something like this, then you're going to be down in here, probably risking something like this, right? That's going to be my basic one-to-one premise going in. So I know that I'm not going to take a loss any bigger than this. But right here, that second minute we were in that thing, was that a good move? After this compression, it wasn't a bad one. It wasn't a bad one because think about it. Why not just get out, take an $80 loss or whatever if you don't get paid? Just take the small loss because remember, we're trading a 1 minute chart. So if we take a $100 loss here, tightening up very aggressively, and then we come down and maybe we grab another trade down here at 62%, we've still got a great chance at our 300. And at 78%, we've still got another great chance at our 300. So if price goes against us and we get stopped out, we rip off the Band-Aid, we take one hit, and then we go back and we hit 300 and 300. We're up 600 and we only lost 100. We're working with a net of 500. If you can do that, that's how scalping can make you a lot of money. When you can limit those losses and pull the Band-Aid off, take the loss, you bet. Absolutely right. Okay. Let me see, long or short silver. Okay, we just, all right, let's run through some of these markets then, and then we'll go ahead and get going. Let me see, 54 cattle. You sure you weren't an auctioneer in your first life? I grew up going to cattle auctions with my dad, cattle. Yeah, I remember the auctioneers when I was a little kid. We would go to the ring, and they would run cattle through, and my dad would bid on pairs. If you've ever been to a bull auctions are fun. They're parties. They're huge parties. A lot of food, lots of drinks. Lots of money flying around. Those guys will show up and they'll buy bulls for hundreds of thousands of dollars, and it's fun. It's just fun. It's a good place to be. Tina, glad you liked it, Tina. You're welcome. Let me see. Universal, it's pure price action. I watched that trade. There you go. Your comments were good, and see you hit the take profit. Patience is key. Good to see. It's hard, Universal, because if you're scalping, really the most important thing you can do is pull the plug quickly. If you wait too long, a lot of times you run into trouble. The longer you're in trades like that, the tougher it is. But that one, I won't say we were fortunate because we're following a bullish market, and the market is moving to the top side. So we're in pretty good shape here. Let me see. Steven, was NFP the driving force for the bounce after 38.2? I mean, was the gold trade NFP related? Not really. The NFP volumes were long gone. It was still active, but what you had there, Steven, was you had a range. So the NFP number created the range that we built our Fibonacci's with. And I mean, guys, it just doesn't get any better than that. Look at that 5-minute chart. 38% at 44.79. Our low down there was 44.79.19. I mean, we've bounced up to 44.83. That is what I call perfect market structure. So to answer your question, it wasn't directly on the back of the NFP volumes. What it was a function of the NFP range. So indirectly, NFP played a huge role in that trade, a huge one. Let me see. AJ, good to see you. Hey, I just new to your channel. Seems like that scalp was a great move. It wasn't bad. Wasn't bad. Reagan, good to see you, Reagan. Okay, Steve Francis, you would make a great auctioneer. I'd make a great something. But this right here with price actions, why I scalp a lot, because what happens now? Level's going to get taken out. And when it gets taken out, there's a good chance that gold's going to rotate back down into this NFP range. Let me see, Steve. Supreme Court tariff ruling is supposed to be due today. How would that affect the markets? Huge. It's going to be a big one. There's a lot of things happening. We mentioned yesterday the potential legislation to block hedge funds from buying tracts of houses. Well, you factor in some tariffs as well. You know, if you get the tariffs blocked, supposedly, it's going to make business from a macro perspective very interesting. Who's going to be exporting? Who's going to be importing? What's that going to look like? Is there any other measures, protectionist measures that can be taken by the administration aside from tariffs? I think there is. I think they could get into some serious red tape where all of a sudden there's all these new rules and regs when you import your stuff. I think that the Supreme Court is in an interesting position, and that's really an astute observation, Steve. It really is. Fantastic stuff. Okay, guys, let's go ahead and cover some of these markets that we were asked earlier today. We've got Bitcoin. We've got Great Britain pound. We'll go with a Great Britain pound Japanese yen. All right, copper. Copper, Bitcoin, Great Britain pound, Japanese yen, crude oil futures. Oh, man, that's like my wheelhouse. All right, let's do it. Okay, so here's a good look at Bitcoin. Bitcoin's sort of in an interesting position, what I would call a precarious position. You're looking at a situation where we bounced. We bounced from 85.5, and it was pretty good. Bounced up. That top side, this range is very, very important. Understand that this range is everything for Bitcoin right now. So nice monthly range, spike low back to April's tariff panic, all the way up to that all-time high at 126, 125. And then we've come back down. We tested this zone beneath 78%, 85.5. So the area, just without any indicators, the area between 85 and 95 is seeing a lion's share of the action for the past 60 days. So the question now becomes, do we break to the downside or do we break to the top side? For me, if we take out 85 and really run at December's lows, more than likely we're going to break and go to 75. Personally, I'm bullish crypto and bullish Bitcoin. I think the administration here is going to do a lot to support digital currencies. If you do get a break up above 95, then you're more than likely going to run up above 100 again and settle out somewhere maybe in the 105 range. Now, as far as short-term things, if I wanted to buy into this market, is it a good idea to work a daily Fibonacci? We could. We could. There's no rules saying we can't. We could do something like this, spike low, spike high. You can see exactly what's happening. That bottom of that golden zone is very nice at 89,780. But what's 89,780? Essentially, it's 90,000. So there's bidders at 90, but how many? Well, we don't really know. So if we break beneath this, I think we're going to go down and maybe look at 85. So I would be a bidder from 85 on a trade type of an idea with a firm eye on December's low. If you break beneath December's low, boy, you got to really look out. That's how I would look at Bitcoin. I'm bullish. I would love a big pullback to 75. Then we could maybe get a little bit of glimmer in play for an investment. But right now, the market doesn't want to do much. All right, we had a question on copper, and then we'll get to the Great Britain pound, Japanese yen. Copper, we sort of talked a lot about this the other day when we were talking about gold and silver. Interesting stuff, right? Copper's on fire, just like all metals are. The need for conductors during the AI boom is going to be a major driver of really the development in U.S. tech and global tech. It's all about AI right now. I talk about AI with not comrades, but coworkers and other traders every day. We talk about AI every single day. And it's talking about us too. But you've got a monthly chart right here in copper. You would love to buy any pullback you could, realistically. Are you going to get 550? Maybe. If you get a pullback down in that zone, that's a fantastic play. As far as a macro view of what copper really is, well, you do the math. You're at all-time highs. What would be the next level up there, do you think? You already sort of hit 6. I'm really partial to quarter handles. So you could be looking at maybe 6.5, maybe 6.25, maybe 7, 6.75, 7. Wouldn't be surprised if you get an intermediate term top right up in here somewhere, 6.25 to 6.50. But big picture, you're really rocking higher consistently in copper. So how high will it go? Who knows? Honestly, who knows? If I was making a topside projection, judging by the strength of the other metals, specifically silver and gold, more than likely you'll look at maybe 7.5. And that's just because I'm partial to quarters. You broke above 5, basically you're at 6. Do you stop at 6 or 7, 6.5, 7? Maybe. It's possible. If I was making a topside guess on what looks to be a real robust year for metals, I don't know what can derail the metals market, especially something like copper and silver, which are used as conductors. And what I mean by that is conductors in these giant data centers they're building everywhere. You've got to have a way to get all of that electricity and all that power into those servers. They're not even really servers anymore. They're something else. They're so massive in scale. But 7.5 ballpark. Yeah, I don't see any reason to believe that metals are going to come down. So will it fly? More than likely throughout the year print. All right, let's see. Great Britain pound, Japanese yen. Let's go ahead and take a look. Okay, we've already got a key level to the top side we're watching on the monthly. What is it, 215? You'll notice that this area right here was sort of a liquidity sweep. back in what, July of 2008, crisis period. That was, I believe, about a year after Bear Stearns crashed, which was sort of the opening salvo of the big financial catastrophe of 2008 to 12. 215, pretty good big round number. I'd be watching that closely. As far as how to trade it right now, I mean, clearly you have a bullish bias. The breakout is on our monthly. We're above our upper Bollinger Band. Well, the bidding really started in earnest back there in April of 2025, and it's been a really robust, 9 months or so. So you want to buy pullbacks. The question is how do you locate a level, you get your pullback? Sort of choppy up here. Pretty good, though. I mean, I like the market structure. Really a robust bullish run. 1, 2. Those are holiday weeks, so don't get fooled by those. Holiday. And now you've sort of got a little bit more action. The throttle's opened up just a little bit. And right here, 207. Love to get 207. Are you going to get it? Probably not. Right now, I would be waiting just because we don't even have to go to a daily to see what the situation is. It's just chop city, man. I mean, that is a vintage picket fence. Just chop, whipsaw chop. Fibonacci's won't help you there. They won't, and I wouldn't go into a lower time frame at all. I would wait for this thing to move. If you get a shot up there at 215 to sell, that's a pretty good one. And if you get a pullback down there at our Fibonacci zone, that's a fantastic zone as well. You're just sort of in no man's land. I'd probably be looking at another pair. I really would. At least moving into maybe the next BOJ meeting. That really will tell the tale. Let's see. Let me see. Change is needed. All right, I like your name. Can you look at silver, and please, what do you think? All right, let's look at it. Silver's a lot like the gold prognosis. I mean, there's our daily cup with handle, and it's setting up beautifully. I mean, there's your cup. There's sort of your compression and potentially a break. Where's your break? Remember your all-time high. Your all-time high is up at 84, somewhere in that zone. You're getting compression right around 80. Shouldn't surprise anybody. We talked about 80 a lot over the past couple of weeks, or last week since we've been back. That area right there is sort of the catalyst for the two-way action that builds the compression, potentially going to look at another leg up. I don't know that there's any way around that. So does that help us as traders? Shane, does a daily cup with handle help me as a trader? And I'd say, well, as an intraday trader, probably not. But it's important that you understand what's happening. You're seeing the market really load up and give us a formation that we're very familiar with right around a key level. Typically, that's going to lead to a bullish break. So let's go ahead and take a look at your short time frames. I know that a lot of folks love to trade silver intraday. I find it to be incredibly risky. Something like this. So something like that, 78.70, 76.83. I just don't think you're going to get the pullback right now off of current highs. So if I was trading silver, I would be watching this daily cup with handle very closely. Something like that. And then once the break is on, it's pretty easy. Then we just buy pullbacks. As far as a topside target, oh, man. Came a long way not to hit 100. There's a lot of money in this thing, and it all seems to be to the long side. So I really like silver. And, of course, a Fibonacci pullback. If this cup with handle breaks down, a pullback right down around 69.50 is fantastic. Very possible. A lot of volatility in this market, that's for sure. Everybody's thinking silver. Let me see. Ken, crude futures. All right, let's look at crude futures. A couple more markets, and then I'm going to have to sign off. We got to hit our fundamentals, too, what exactly all this means. Okay, this is going to be February WTI crude oil futures. What's our volume today? What did we already roll over? It looks like we already rolled 58.41. Okay, we've got about 90,000 in the can right now. So let's go ahead and just look at these numbers. This is what your U.S. oil contract is still tracking, 58.40. So this is 58.42. Volumes are a little bit low though, so my guess is there's a split. This is either rolled or it hasn't, or it's getting ready to roll towards the March contract. Very flat on the daily. I mean, the Bollinger Bands are parallel. This is a flat market. As far as what we covered a little bit earlier today, that was sort of our trade idea to lead off, was with your U.S. oil. Essentially, we're looking at 60. I put a trade idea out yesterday where we're looking to sell basically right in front of 60. Very bearish, but if you want to look at futures, how would I trade it right now? Well, the market essentially just opened. Let's take a look at your 30-minute chart, not a 15 to 30. So you've got 9 a.m. Eastern. This is sort of tricky. I mean, I'm not seeing what I need to see. 9 minutes in, there's only 3,000 contracts traded. Let's have a look. Something's wrong here. My guess is we already rolled over. Show you what I'm doing. Featured products, WTI crude. The way you find out which contract you need to be trading is always volume-based, always. So you're looking at rollover. Rollover is a big deal with crude oil. The volumes get split and diluted, and it can be a real mess. Yeah, that's exactly what's happening. So we're not, boy, these next couple sessions for crude futures are going to be tricky. 87, we're printing about 87,000 contracts. March contracts already showing 58. That's what we call a volume split and dilution. That means that expect choppy price action, maybe a range trading strategy today. 30-minute chart, we're starting to move a little bit. I'm looking at 60. That would be my trade of the day. As far as what to do right now, honestly, I would have to see probably another 3 or 4 30-minute price bars before we start building ranges and talking Fibonacci's, or maybe even establish some intraday pivot points. A lot going on in crude. I would need more time to let that simmer. I know that's not much help, Ken, but that's what I got for you. All right, guys, that's probably good on the markets. Let's see. Geez, we got a lot of comments here. Let's see. Let's answer a few of these questions. Hello, that's me. Ahmed, hi, Shane. I hope you have a wonderful day. Bitcoin is struggling. What do you think is a big market move or news shift to happen to make Bitcoin climb up quick? Nothing for right now. It's going to be all about probably regulation, or deregulation. I don't know that anything's going to happen with Bitcoin until the Fed meeting. We're watching interest rates. We're watching the tone of the Fed. The next Fed chief more than likely is going to be very receptive to crypto. And if that's the case, then probably going to get your big move there. So I don't see anything until towards the end of the month, Ahmed, to be honest with you. Tina, have you got a gold pullback price, please? Yeah, we can go ahead and give you a gold pullback price. Man, that 5-minute gold was an absolute banger. I guess we should have held it, right, guys? I always laugh because a lot of folks, like I said, kicking the cat, they're going, oh, I had perfect entry. And yeah, we had perfect entry. So what? If you're a position trader, be a position trader. Just make sure that you pay yourself for your time. Yeah, so your pullback zone here, Tina, a macro pullback is something on like this weekly would basically be what I would be looking at for a macro pullback, something like that. And honestly, I just don't see us getting it. 4,300, I think it's gone. So for right this minute, I'd probably wait and see how today's session set up. Got a lot of lines in this chart. I would wait and see how this sets up and then maybe have a pullback Monday. But for right this minute, I don't see much of anything. You could look at a 30-minute chart if you wanted and maybe do something like this just as we get a little further into the U.S. session and just base everything off of the bottom of your NFP number, which isn't a bad way to do it. It really isn't. We've just already bought in and sort of already nailed that trade. So don't really have much for you there. I'm sorry. But we've got to see. We'll have we'll have one after today's close. But for right this minute, not much. Just sold my gold and silver. There you go. Let me see. Steven, do you use multiple monitors when trading? Yeah, I have 2. What are these, 40 inchers? So my front of my screens look like that. They're in some old YouTube videos I put out over on how to trade. I show my monitors. Sometimes I pull that one up like that so I can see. If I'm trading a real volatile, like a NASDAQ market, I'll turn the monitor so it's a vertical. So I can see the trading dome, about 2 feet of trading dome. I like that because it lets me really see where the market is at with regards to price. I always like to know. I never lose sight of price. Very important to me. Let me see. Dean, any thoughts on NVIDIA? Man, all right. All right, 30-minute chart for NVIDIA. We've got a big-time level right there. Clearly, we were looking at this earlier, I believe. There it is. There it is, Dean. 38%, 185. Is 185 a bid? Probably. How many shares should we buy? What, $200 a share, so what's 10,000? Put 10,000 on it. So 10,000 divided by 183 is what? What's 10,000 divided by 183? Anybody know? All right, let's buy 50. Let's buy 55 shares and see what happens. The demo dollars, these are demo dollars. Nobody get carried away. Is it a pretty good execution? Oh, it's off trading session, so we can't buy it yet. All right. To answer your question, though, Dean, 38% is a big deal. 185 is a big deal. Pre-market, you're trading up there at about 185.74. So that's going to open in about 15 minutes. But if you do take it down to that shorter time frame, what's happened at this zone? It's been pretty good. Does it break? Well, if it breaks, you're probably heading down to maybe 179. You could hold out for like 180s. I'm still bullish. A lot of what's going to happen in NVIDIA is going to be predicated upon the China-Taiwan situation. Semiconductors, Taiwan's a big player in semiconductors. A lot of the manufacturing and a lot of what goes into that market comes out of Taiwan. That could shake NVIDIA. I would be careful, but I mean, it's really hard to bet against something like a NVIDIA, especially in the sort of the times that we're in. All right, gold's climbing, absolutely. Bob, good to see you, Bob. Welcome. What a good way to start the year with No Donation Friday. Yeah, we've been pretty aggressive today, though. Pretty aggressive today. It's been a great week. Absolutely, you're welcome, Dean. Okay, let's cover a couple fundamentals, and then we'll go ahead and call it a day. I've been going for way too long, but this has been a pretty good trading day. Okay, so here's the report. This is the official report, bls.gov. If you want to read it for yourself, I'll go ahead and throw it in the live chat here on YouTube, and then I'll go ahead and throw it in the live chat here on how to trade. There you go. The employment situation summary. Both total non-farm payrolls, employment increased 50,000 and unemployment rate 4.4% changed little. That's a lie. 4.4% was a big downtick from 4.6. That was a big deal. So employment's up, unemployment rate's down. What do we have here? The last paragraph. The devil's always in the details when it comes to anything the government puts out. Anything the government puts out. The devil's always in the details. Last paragraph's huge. This is where they modify previous releases, and we start to get an idea of what exactly is going on. The change in total non-farm payroll employment for October was revised down by 68,000 from negative 105 to negative 173. Holy cow, that's garbage. That is garbage. And the change for November was revised down by 8,000 from 64,000 to 56. With these revisions, employment in October and November combined is 76,000 lower than previously reported. Unbelievable. Unbelievable. It all stems from the shutdown. I'm sure the government wasn't in any hurry to report those numbers as they came out. That might have been the reason for the shutdown. Who knows? I will say this. Negative 173,000 jobs for a month last October. That was really horrible. We don't see negative prints in NFP very often at all. And to see one with that magnitude, what happened? What happened? Was that a function of the government layoffs that the administration has been conducting all year long? Could have been. Could have been. Fascinating stuff right there, though. That's the devil's always in the details. That is a monster number and a huge takeaway from this. All right, guys, remember, if you want to trade anything, head on over to Switch Markets. They got a lot of wintertime bonuses right now, a lot of free tools, everything you need, really, resources. 2026 is going to be the year of value added over at Switch, so be sure to check it out. And also feel free to cruise by the How to Trade trading room and send me a private message. Ask me anything you like. I'll take time out and answer your questions. The idea here is just to help you guys get on the right track and see if you can make a horse race out of this, as they say, help you along the way on your trading career. Switch gives you great market access and really, zero commission accounts, tight spreads. They got everything you need. Thousands of markets is what I was impressed with. Being here in the United States, I don't get the opportunity to trade there, but the CFD shares, those are fascinating. So if you're an international client, boy, you could trade stocks with leverage with CFDs, very tight spreads too. I was impressed. I was looking at some of those products last night, so maybe something to look at going into the new year. All right, everybody, I'm going to go ahead and sign off for right now. Thank you for joining me today for NFP Live. We had a pretty good gold scalp. All in all, interesting number, a little bit better than we expected, I think. 4.4 unemployment is the headline number, though. We'll see how the financial media covers this throughout the trading day. And all right, that's all for now. You guys have a fantastic session. Have a fantastic weekend. Trade the action well, and we'll talk soon. See you.